We're going to take a look at Intersite and intercompany transactions in X3 and what you can and can't do with them. We're first going to start with Intersite transactions. That's two transactions within the same company, basically moving stock from one site to another. There's really no revenue recognition. There's a possible way to trick it a little bit into recognizing some of the revenue, but not necessarily in full unless you really modified the auto journals. The first thing we'll take a look at are the site setups. So we need to set up the sites as basically customers and suppliers. So we'll go in, I'm going to take a look at customers here. I have INA and PPC both in this lower box here. They're set up as Intersite, the site being the same name as the business partner. So I'm setting up a supplier with the same name as the site itself, PPC and PPC. These can be different. You can have a customer or a supplier name with a different name than the actual site, but it's easier to keep them the same. Same thing with INA, and I created another site in a different company named SL1 for Site 01. So this is really all there is to that setup. Next thing we'll take a look at is the product. We're going to use a product, test product, and we need to have product site records for all the sites we're going to be transferring this product to. So you see for the test product, I have a product site record for each site. I also have stock at my initial site here, so we have plenty to transfer to the other sites. So next we're going to look at, there's two ways to do Intersite transfers. One is just a basic Intersite transfer, which will move the stock and post to the ledger. And the second way is you can use purchase orders and sales orders and deliveries and receipts, and that's the end of the line. There's no purchase invoicing or sales invoice between two sites of the same company because they're the same company. So we'll first look at this first stock movement. This is the most simple and quick thing you can do here is stock, receipt, entry transactions, Intersite transfer. Just going to create a new transaction. I'm going to go from PPC to INA. Our product is going to be test. Before I do that, I have to remember something. Let's change back here. Okay, so now I'm going to do my stock selection. I have 988 in stock. I'm going to tab through here. I'm only going to select 1 pound. And it's going to use the value of the item in stock at the current site as it is. If I go to my accounting interface, I can run that, and this will post to the journal. We'll take a look at the journal entry. 4388. We'll look at our journal. We're in our journal. We'll look at today, stock transactions. Stock changes, scroll to the bottom. Looking for 15 here. You go to the lines and you see basically a mirror image of each other. INA site and PPC site, the stock leaving PPC, going into INA, and it making it as a stock adjustment on the other end. This could be intercompany AP and AR if you wanted, or intercompany sales, or however you wanted it to be. But again, you're not increasing the value. There's no revenue between the sale here. It's going out at 10 and in at 10. So the next option is you do have the ability to change the receipt value on the other end, but that won't change anything on the host site. So I'm going to take a look at changing the value on the host site before it changes over to the target site. To do that, we're going to go back to our product site record. Here, I have set up a standard cost on this product at $10.50. The cost that it's in stock, average or FIFO, is $10 a unit. So I can change my valuation methods basically to bump the value up at this before it leaves the site and goes into the other one. So this is a second iteration of something that can give us different results. So now that I have that set, I'm going to go back and do an Intersite transfer again. And I'm going to have to re-implement that change. So in my stock valuation, I can have different valuation methods for specific actions like Intersite transfers. I'm going to use order cost as first, the standard cost as second. So when I do that, and I do this stock change now, my product, my stock, select my stock, do one again, create, post, get two transactions now. Go to my journal. So here's my newest transaction. So what this did is it made a stock adjustment to up the value of the stock by 50 cents before I transferred it. Okay, and that has to go to stock adjustments or whatever other account we want. And then we have basically the same postings we did before, stock from one site to another, and stock adjustment, stock adjustment. So this is another method of upping the value to go over to the other site. There's still no sales revenue, although you could probably do something with these accounts to mimic the sale, if you will. But again, it's not as clean as like a sale to a customer. We will look at that next in company-to-company transactions, which you can do. Now, there's one more iteration of this I'm going to show you, and that is if I change my valuation method back on the product site record. If I change my valuation method for the Intersite to look first at standard cost, then at order cost, I save that and I go back here, and now on my PPC site, my initial site, I'm going to change that standard cost back to $10. I'm going to basically run a recalculation. So now that standard cost is $10. Now when I do this stock change, new transaction, PPC to INA, product is test, select the product again, 1 pound, create, go back, run the accounting interface, get a stock transaction. Go back to the journal. Counting date of today. Reference stock for stock change. Scroll down. I don't think it's there yet. Now it's there, 17 here. Now look at the posting and you see the stock went out of the site at $10 and then the other one at $13. So again, this is a way to increase the value. You can make these accounts whatever you like if that satisfies your goal as to what you want to see on your individual site P&L. It's just not as clean as an actual sales transaction to a customer. So this pretty much exhausts all the options you have for the Intersite. Now there are more formal ways to do what we just did, that Intersite transfer. You can start with a purchase order. And this is what we're going to look at now. So if we start with a new purchase order, okay, we're going to be purchasing from INA to PPC is going to be the supplier, just like we did before. Now we're going to select our test product again. It's okay. Just 1 pound. Gross price. I'm going to make it say $15. We'll see that our purchase order price is not going to be relevant. Okay, so it automatically created a sales order. Okay, and how it does that is there is a setup for intercompany to where this is our Intersite transaction. What this does is it recognizes it based on the supplier and customer setup as being acting as the site. If I generate a purchase order, it's going to generate a sales order. Okay, if I turn that off to no, then it won't do that. And yes, it allows price transfer. And that's really all we need to know here so far. So now I'm going to go to my sales order, which is automatically generated. It's at the top of the list here. So PPC is selling to INA. I'm going to make my delivery. And this basically is going to create the first half of that transaction that we created with that Intersite transfer. I'll validate it. You see I have $15 a pound in here, but when I go back to look, I got to run my accounting interface because the delivery was made. To get a transaction to the journal, 392, go into my journal. This time it's going to be a delivery. Let's see if this is it. It's not it. There it is. Right, so you see $10 is the transaction. So there's just not a way to use the costing from these processes to affect the stock value as it moves. So our next step here, we do a purchase receipt on the other end. You can put this up in your favorites here, purchase receipt. The site receiving is going to be INA, supplier is PPC. I go down to my delivery selection, I'll see that it's right there ready to go. It's going to bring it over into queue status, but that's okay. So line amount again is 15, but it won't post that way. So now I'll go back to my accounting interface, run it. It's 4393. Go to my journal. It is there. This is what it looks like. You see $10 again, even though the document said 15. So again, because it's Intersite, we're stuck with this value of it coming across. And that's the end of that process. You cannot create an invoice or anything for an Intersite transaction. If I go back to sales deliveries, okay, this is my last wrong date. Look at my delivery here. This is the last one I did today. There's no way to click invoice. Okay, you see it shows Intersite, not intercompany. Okay, so next we're going to take a look at intercompany transactions. This is where it goes through the entire sales process. Basically, it doesn't stop at delivery and receipt. It then goes on to, you can do sales order and sales invoice. So now let's take a look at what happens when we start at the basic Intersite transfer, because you can do an Intersite transfer, use that function even though it says Intersite, to do an intercompany transfer. So our storage site, we're going to transfer to PPC again, but this time instead of INA, we're going to go to SO1. That's the site I created at a new company. All right, product against test. And I go to stock selection. I select the stock. And I'm going to move 1 pound. Now here, you can actually put in an order value. So let's see what this does. I'm going to make it 50 just to see what happens. I create my transaction. Now you can get a lot of different results using this and those inventory valuation changes, which I showed you earlier. So let's run our accounting interface. See what this is going to look like. 2 stock transactions, 94 and 95. Go to our journal. So we're going to be stock change transactions again. Sometimes it takes up to 30 seconds for this to post.